Hey YouTube, welcome back to the VIP Financial Ed YouTube channel. It's your boy Matthew, your cash flow coach. We're here to help you go further, faster financially. This channel, if you're brand new to it, is all about maximizing your cash flow. Now, here at VIP, we define cash flow as the difference between all of your streams of income throughout the month minus all of your expenses throughout the month, and we use averages over extended periods of time in order to determine exactly what that leftover sum is. And the more money you have left over at the end of the month, the more freedom you have, more freedom of choice. And that's really what this channel is all about, is just having lifestyle freedom. Now here today, you may not recognize this background or actually even the guest here sitting next to me. So let's get into it. For you guys that have not tuned into recent videos, this may be the first time you're hearing that I have just now closed on my first.
Congratulations.
Thank you very much. This is my first short-term rental property, folks, and I'll give you a grand tour of the place on another video. We're not going to use this opportunity for that. What I really want to do is just introduce Richard Fertig. Richard is actually another YouTuber. We found him on YouTube. I reached out to him and said, hey, we've got to meet. I'm just now getting into the business of short-term rentals, and he's an expert on the subject. In fact, he owns and runs the channel Short-Term Rental University. That's his business, and he's killing it, guys. I mean, I got hooked on his videos fairly quickly, and the tips and tricks I was taking away as I've been obsessively studying this subject for the last several months have been priceless to me. I can see already where it's going to make a huge difference with not just being able to maximize my occupancy to the levels I want it at, which is not, I'm not shooting for 100% here, but they're also it's going to allow me to maximize the price points as well, which is huge. And so this is a really exciting chapter for me, and I want to bring you guys along for this experience, and I want to encourage you to continue thinking out of the box when it comes to how you can go about making money. And at this point, we have a whole bunch of revenue streams, and these revenue streams have turned into a load of money every month, basically, and it's becoming easier and easier for us to participate in other new opportunities. And I really found Richard's story fascinating about how he entered into this space. I'm a rookie. I have absolutely no idea what I'm doing. I'm going to learn a lot of hard lessons, I'm sure, and that's why I lean on experts like Richard. And this is why we're such huge advocates for mentorship and for coaches. If you guys have not yet taken advantage of your one free coaching session, make sure you hit the link in the description below. We do give everybody here as a courtesy a complimentary consultation, and that's just to help you guys get off the ground and really start to take your finances seriously. I mean, we just have to admit to ourselves that we were undereducated about money. So let's get a second set of eyes on your finances and figure out if there is an opportunity like what Richard's been doing and what I'm now entering into here as a diversified revenue stream. So how did you first get into short-term rentals? It's such an interesting industry.
You know, it's a fast-growing industry. It's rich with opportunity, and I, like many people, just completely underestimated it. Now, I'm talking about 5 or 6 years ago, so it's very early days.
Yeah, it was.
Airbnb is about 10 years old, right?
Already?
So, yeah, so it's 10 years old, but it's the single largest hotel company in the world, and they own no assets. It's the single largest hotel company and the fastest growing, so the story gets more and more improved, and I think we're somewhere in like the second or third inning, so there's a lot more room to run. But how I got into it was just by accident. I was at a cocktail party. I met somebody who was on Airbnb, and I was just picking their brain. Really sharp person. He was on sabbatical from like Stanford, so it wasn't just somebody who needed the income. He was choosing to do it.
Okay.
He was doing it because he really enjoyed hosting and having people from all over the world, which is a perfectly good reason. While I enjoy doing that, I'm also much more about, you know, the finances behind it. Sure. And so I started picking his brains. How much money are you making, and what do you think that compares? And in my own mind, it would trade at a discount to long-term rentals, not at a premium. If I couldn't give this to you for a long enough period of time, I'd probably take less money, and so it's a great deal for the person, the guest that's staying there. And the more that I dug into it, the more I realized that it actually trades at a premium, and a substantial premium. And how about this? A multiple. Right now, in today's market, you're looking at 2 to 3x what a long-term rental would command.
That's insane.
The people that are on our channel, please come visit for tips and advice. It's all free. Are closer to that 3 times multiple because they're really good hosts.
I see.
And so as the space grows out, the cream always rises. If you're really doing what you're doing really well and you know how to do it, you will always command a multiple. But it was really just an accident, and I converted a property that was in the long-term rental market to short-term. I went out and did the entrepreneurial thing and bought the furniture and furnished it, made it look really nice and hospitable, the way that people would, you know, I think would enjoy it. And almost immediately, I was hooked. because the cash flow was so much stronger. To put it in real numbers, we were looking to rent this apartment. It was going to be $7,500 a month. The broker, we missed the prime season before the kids go to school, so he said, we missed it, let's go to $7,000, didn't clear. $6,500 didn't clear. He came back to me and said, how about we put it out at $6,000?
Where was this?
New York City.
I see.
I said, how about this? Why don't we go short-term rental? You're fired. I'm going to do this on my own. That first month, I made $18,000.
Woo!
I couldn't clear at $7,500 or $7,000 or $6,500. Month one, $18,000. So I knew I was onto something, and I just dug down and figured out how to do it as best as possible with no prior experience, right? This was sort of fly by the seat of the night, being an entrepreneur, taking risks, making investments in myself and in the property, creating a great environment and hospitality focused. And now I've added a second and a third and a fourth and a fifth and a sixth, and now I'm building 100 units.
That's incredible. And so let's talk last year's numbers, right? Yep. Because your forecast looks really, really strong, and it's pretty big, right? So you've scaled this out. And so we're talking here to an audience that I'm certain is probably going to dip their feet in the water for the first time, not a ton of experience, if any at all. So how long did it take you to get to 6 figures in net cash flow per year?
I would say the challenge is I never actually took the money out. I kept reinvesting.
Yeah, you put it back in.
Right?
Sure.
I kept reinvesting. So
sure.
that's something that's really important.
We'll count that. We'll count that as cash flow.
But I was cash flowing 6 figures in probably 12 to 18 months.
Wow. Okay.
Now the property that I started,
that was a unique property in New York City. It's
but now it's a multiple of that. You
right.
know, we're probably closer to over $1 million a year.
Wow. So you're at what, 7 properties? You said 6 properties now. 7?
Yes. 6.
So what are you doing now? You're expanding out into. Tell me a little bit about these 100 units. What are you doing?
So let's just take one step back. Where I am today is not anything that I envisioned 5 years ago when I started, right? I was like you.
Yeah.
I
turned wanted to check it out.
Check it out. It worked so well that instantly my ex-wife and I decided that we were going to expand, and we expanded very much like you. Our why was to have a second home that we wanted to use, and we would only be there, say, 2 to 3 weeks a year. So for the other 47 or 50, let's rent it out. What we found was that paid itself off. And then I created what I call my 15-year plan. Okay. It's a popular video on our YouTube channel. That was my why then.
We can just link it in the description for you guys.
Awesome. Okay. And basically I wanted to have a portfolio of properties, so a diverse geographic portfolio of properties across the United States where I would go vacation 1 or 2 weeks a year with my kids, and other people would buy it. Back then I was getting 15-year mortgages at 3%, and so not only were we paying 15-year mortgages, we were also cash flowing on top of that, and that allowed us to expand. And so before I knew it, my 15-year plan was, you know, I had half a dozen places, vacation homes all across the country. Crested Butte, Colorado, Fairhope, I had places in New York, I had a place in Wyndham, New York, just adding to it. And one thing has led to another, and now I see a huge opportunity in real estate development specifically for this market, where it's custom designed and custom built. I'm taking the hospitality type theories that I've learned over time and creating something that didn't exist before. So like I never had that plan, but as a constant evaluator of opportunity and risk reward, I seek asymmetric risk reward. If I'm buying land cheap enough and building costs are cheap enough, I'm not really participating in the real estate run-up that we've experienced now, and I'm building something where I can gauge demand.
Tony Robbins is a big fan of asymmetric risk reward. You know that, right?
Absolutely. In fact, I was just at his Platinum Economics Summit, and that's what we spent the entire time talking about. And the funny thing was, one of his experts came on and talked about this huge land tract that he bought at a discounted price, and then he built on it, and I was like, that's what I'm doing.
Wow. Well, it's interesting because Richard and I share in the methodology of lifestyle assets, where we want, really the purpose behind us even acquiring these properties to begin with is for our own personal enjoyment. And then if we can turn around while we're not using the properties and cash flow them and generously, it's hard to see too many downsides in that, right? And what has been your biggest nightmare in this industry? And I'm curious whether or not that ever even caused you to second guess what you were doing here.
Look, I think if your why is strong enough, there's nothing in the business that will interrupt you, because your why is really strong, and so you're committed to it and you overcome adversity. If you're not really sure what you're doing and you're sort of just testing it, there will be something that stops you out. And that's probably what stopped you out in other business ventures or other careers. You're like, oh, that was a pain in the butt. So my biggest nightmare was I had a guest, we filmed it on the video as well. He wanted his money back. Airbnb, it was about $20,000 in income. And Airbnb sided on my side, and then they flip-flopped, and then they came back. And it's all on the video. But all I did was threaten to take my listing off Airbnb, stick Airbnb with the loss, and then rent it short-term or long-term. You know, like, I don't need them. They need me at this point. So it didn't stop me in the least, and in the end, I won everything. I got paid. So
it was really nothing more than a leasing dispute. It really had nothing to do with property getting trashed or having a pipe burst and having an issue with, you know, having to deal with just general maintenance.
Look, real estate, as we talked about, it's going to be filled with risks and challenges, and if you're not prepared to deal with them, then may not be the best investment. Maybe buy a stock or buy a REIT. You can have a passive real estate investment. That really is passive. This is not passive. But if your why is strong enough and you're connected to the area, you overcome.
Right. Wow. Well, guys, I want to continue to feature more and more episodes about this subject. I think it's a terrific way for you guys to start to explore diversifying your income streams. Let's get those cash flow numbers up, guys. And again, if you haven't yet checked out Richard's channel, we'll link it in the description below, Short-Term Rentals University, or STR University, right? And he's going to continue to put out really great products, programs, and also services to help you guys get off the ground and make this a successful venture for yourself. The more I can surround myself with people like him, it takes it off my plate. It takes the guesswork away. It minimizes the mistakes I make, and it certainly, of course, maximizes opportunities along the way too. So we've had a terrific time here already today. It's amazing to me that we can make great friendships off of a platform like YouTube. I would encourage you guys to do the same thing. There's no difference between me as a viewer, an audience member of him, and just simply reaching out and saying, hey, let's connect. He spent 12 hours in the car to get here yesterday, and through treacherous conditions, quite frankly. In fact, my brand manager was involved in an accident on the way here. Charles, his production manager, was stuck in a snowbank, a parking lot. We'll be honest, it was a parking lot. He got stuck in what looks like it was a runoff ditch. It wasn't even a ditch, it was like a gutter. And so, yeah, we had to winch him out this morning. And then we just spent the last hour and a half soaking in the hot springs and talking business. So there is so much opportunity in networking and connecting and getting involved with people with more experience than you. So like I said, make sure you get your free coaching session if you haven't already. If you're not a subscriber of the channel, click that subscribe button. Make sure there's a D at the end of that E. Hit the bell so that you're notified every time posts are uploaded to the channel as well. And drop a like here if you guys want us to do more videos and bring in some of these experts on other topics outside of what we have so far. It's very important that you guys let us know with that thumbs up. Any comments would be appreciated, guys. If you guys have done short-term rentals in the past, I'm brand new at it, so I'm gonna learn a lot. I'm probably gonna bang my head against some of these concrete walls here a few times, I'm certain of it. And so I would love to know what your stories have been. What tips have you discovered for yourself? What stopped you? What have been some of your barriers? We're going to get into a few more episodes. I really want to dig into some of the numbers. I think it's going to be really helpful to say, hey, what if you are a beginner should you be looking at in order to really dive into your first short-term rental instead of looking at these long-term landlording opportunities. I personally don't think it's a great time to be out there buying. Not if you're not already earning at least $10,000 a month doing something else. If you're making $10K a month somewhere else, then we can easily get into the long-term buy and hold market and do so safely and cash flow a lot more easily because we have great down payments and we've got cash that will protect us in the event of something going wrong. So guys, let's make sure our priorities are in the right order. Until we see you on the next video, make it a great day. Take care.
Thank you.